And what you're having is a cost of living crisis across the board that's going to be devastating for most working Americans, except the billionaire classes that own huge assets on cheap borrowing. I think they move us into tokenization of assets first, where you're obliged to register. Otherwise, there's fines, there's threats of prison. They'll write more laws that will permission more force. Governments have got too big and have stopped fearing citizens, and citizens now fear government.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 18th through August 25th, 2025, while supplies last. First this week, the 1-ounce gold Australian kangaroo or gold nugget coin are just $60 over spot per ounce. Next, pre-33 US gold $10 Liberty coins are $50 over melt for AU grade and $70 over melt for BU grade. Gold 20 franc coins are just $30 over melt per coin. Next, silver Australian kangaroos are only $2.79 over spot per ounce. And with a 250-ounce monster box, they're the lowest priced monster box available. Finally, silver 10-ounce Nordic mint bars are just $1.89 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Francis Hunt, the market sniper. Francis, thank you so much for joining us today.
Delighted to be back with you. Thanks for having me on.
Well, it's great to have you today. I did want to discuss the gold and silver markets. Today, we're seeing a bit of a sell-off here. We're seeing prices significantly down today. What do you make of what's happening?
Elijah, we've felt that there was going to be a dull period for a bit now after we had a failed breakout. We got kind of excited for potential breakouts, and then it failed. This was at the back end of July month. And since then, we've expected a kind of a dull, sideways and down market. I just want to highlight a few things, and this is probably best done technically as well as ever. We are the chart guys, if we're anything, and particularly on precious metals, it's such a good tell. So I'll show you a little bit about where we've been and why I think things could get interesting. Before I go to the monthly chart, I'm just going to show you the weekly chart. You may recall, and we were on your channel, I remember this quite specifically, and we highlighted this squeeze. And we throw a few catchphrases so people remember. We said once that was the 2000 level is the blue line, twice, 3 times, and then a lady. That's your run. And we said you're going to run to 29,3000. That's the blue 3000 line, by the way. And then the one thing I want to highlight that happened after that, and for that I'll even take us down to the daily, is that we actually had fundamental events occur. Donald Trump went super aggressive with the tariffs in April, and it looked like he was picking a fight with everybody. You're on 30%, you're on 30%, you're going to be 100%, da-da-da-da-da, and it was quite wild. It was a bit like a drunk barroom brawler who's taking on all comers and swinging from the bleachers a little bit. Not to mischaracterize him, but it was a little bit out there. And we got this panic in April on the US debt markets. The rate shot up. The dollar actually went down, which is a key point in the warning to those dollar milkshake guys that rates can go up without the dollar going up with it. It can actually do the opposite. And we got this surge all the way up that went to a localized high of 3,500. And it's very interesting, that number, because it's obviously the round number. It's a bit of a derivative significance in terms of that for the derivative number. It's also closer to 4,000 because it was 3,500 and a fractal of a cent. So it was slightly closer to 4,000 than it was to the original 3,000. So that would have put the frighteners on a lot of the system coordinators and handlers. And since then, we overperformed a little bit because our target, as we mentioned, she was 29,3000. So we got a little bit of an overperformance. And now we've been hanging tough at a couple of levels. Now I'm going to take you to the monthly. And I'm a little bit OCD when it comes to charts and noticing things, particularly in the precious metals game. So I'm going to just turn all my lights off there so that you can just see the candles. And when we were going up, we went out on YouTube. You can go and have a look. precious metals might come down or pull back or go sideways and not do much positive and be a bit of a sell-off for a short, medium term. By the way, still macro, the biggest bulls, gold and silver out there. However, just made that 3,000, got a super surge blow-off run to touch the 3.5 and since down. Here's a really interesting thing, and I'd like everybody to do this with me. I've just done it. So watch the close. I'm going to put the pink box around the close. Watch the numbers that come up here. So here's April for us when we made 3.5. Do you see the number 3288? 3,288. We can forget the 3 grand. We know it's 3 grand. So you've got 288. We can even forget the 2 if we want to. It's 88. 2 fat lazies. There we go. 89. The close on the month after April, May month, 89. The close on the month after that, 303. So we've got 88, 288, 289, 303. Then the close in July. So we've done quite a few months here. So let's start again. April, May, June, July. What was the close in July? 3290. So let's just recap. 288, 289, 303, and 290. So the 303 is $15 from the lowest one, 288. So we've closed 1 month, 2 months. Let's do it with a pink so everyone can count with me. 1 month, 2 months, 3 months, 4 months in a row within $15. 88, 89, 90, and 303. And that's a slight concern for me. And remember, I remind you that derivatives, month ends matter because of derivatives. And there quite clearly is wick selling in the second half of the month. Now, at one point in the early part of this month, this was all a green candle. And I said, don't get excited. It could come back down. Do you see how we're now the 19th? I don't know if you can see top right there, the date, 19th of August. So the trading days left of this week are far less. We've got another weekend to come to. There'll probably be 2 more weekends. So actually, we've only probably got maybe, I don't want to speak out of turn. I haven't counted them, but 10 more trading days. And this wick has come all the way back down, and we're now at 317. So the highest was 303. So this to me is a little bit of, if I just put in the current closes in a box, that's the current closes for gold. How narrow is that? And then I say, this one's coming on back down too. So it's an observation. And it points to these selling wicks are rejections. For me. And they're all on the high side more recently. So this one over here, you also had a test to the downside and you came back up. So it was at least floor and ceiling. This is all about being resisted up top and coming down. Now, what goes for gold leans on silver even harder, because if we get a sell-off in gold, as we know, typically we get a little bit of a higher beta sell-off in silver. That means silver can retrace. So we've been not trading long after being aggressively trading long since this period here, when we were telling you about once, twice, 3 times, and then the lady, which was a great period where actually in monthly terms you had 1, 2, 3, call it 4, 5, 6, 7, 8 months in a row before you had 2 negative ones, and then you had another 1, 2, 3, 4 green ones. So you had 8, 2, and 4. So you had 12 green months, and you only had to sit through 2 down months, and one of them was incredibly small as a red body. So that period, that overperformance period with that final surge with the Trump tariffs, has made gold and silver a little bit overcooked. You and I have run a marathon. We've gobbled 3 pizzas and had 5 beers each. We're not about ready to get off our couch and go run another marathon. So there's a bit of congestion there. There's a little bit of bloat going on. And that's kind of how we've characterized the gold market. And I think we're going to turn out being correct. And we've got a little bit of selling. And in fact, this close could not only pass 303, it could pass 3290, 3289, 3288, and it could actually close lower, and you could have your triggering event. So typically our tactical people trade shooting stars, is they have a stop at the top of the shooting star and they short the bottom. Short the bottom. Now you've actually got quite a few to choose from, but this one is going to be the smallest one. You went the least way up. You could short there. Now that would be tactical trading. I'm not going to do that, and people aren't going to like hearing that. But if we have a crisis of some form, I'm mentioning the UK debt markets are deeply disorderly and the rates are looking like they're due to spike. So the UK could bully its way to the front of the queue and you could have a bit of a contagion on the debt side. And it's normally, I would say, long run, it's very bullish gold, because people will drop treasuries for gold. But initially, when you're in that disinflationary vibe of panic, people sell everything that's not nailed down, and that could see gold come off. So we are slightly more concerned for gold and have been that way for 3 or 4 odd weeks. And currently the market is giving it to us exactly like that. If I take us down to the lower time frames and just put back on our eye, you'll see our technical. This is a wedge that we're falling out the bottom. And again, that's a bit of a knockback candle, and you're getting another knockback, and actually you're slipping out of the bottom of that falling wedge to the downside at the moment. And that's going to have a negative effect on silver. So XAG USD. As we were talking, I was apologizing for the noise, and those were alerts being pinged on silver. And what do we have? We have silver on a downside break. I'll again just hide all the works. You can see a little bit circumspect after a move up to the high over there and the sell-off. So that's, again, the day down, 2 indifferent flat days. We've had 2 days down and 2 nothing days. So there is a bit of heaviness, despite the fact that fundamentally, I think silver is probably running low on supply, but the paper markets are illustrating that there's a little bit of fear out there, a little bit more fear.
What kind of downside potential do you see in both gold and silver at the moment?
Okay, so let's go back to the boss, which is the king of the metals markets. I'll just pull up gold there, and I'll show you ranges which will give us an idea of degree. I threw a couple of boxes on this when I was discussing this. If, first of all, that is the 3,500 high and then the subsequent 3,120 low. That was our first reaction after that blow off top. That's one box. There's another more slightly inside the range box. That was the secondary high. Whoops, let's get a better color than yellow. Sorry for that. Let's go blue. That's what we were looking for. You've got a localized high and a localized low there. Now, it's a question of 3 degrees of badness. This could all end, and you could come and you could maintain inside this range and just test a new low here. So that would be moderate down. Nobody's crying too much in terms of the long-standing precious metals stackers. That's maybe even just a small buying opportunity. They're not upset about that. You could get a deeper dip if I go the pink option, and then you could run that low and this low, localized low, and you could stay within the larger range, but not run the 3,120. And then there's the exceptional item, which would be, we have a real September, August, October crisis, say with the UK debt, and we have a choppy market and everything is being sold and there's mad panic, and we break that low. I think we're going to probably remain in range unless we have an exceptional crisis, but I will highlight August last year, second half, was the carry trade unwind shock. And September, October are that period where a demand-destroying event, as we've referred, and you get that disinflationary assets crash, and that would probably include the stock market as well. People are getting a bit more circumspect about the pricing on the US stock market. You could probably have corrections September, October that could get disorderly there.
No, when we look at the big picture, though, as you mentioned, you're still bullish long-term, and I did want to discuss what a lot of wealthy individuals are doing right now. We've talked about on this channel how a lot of people are getting out of the stock market. If you look at some of the billionaire investors out there, they've been selling large amounts of stocks, and we're also seeing large amounts of metal being taken off of the exchanges. And you recently did a video on your YouTube channel explaining how the wealthy often take advantage of inflationary times and also use tariffs, for example, to redistribute wealth to the wealthy and away from the middle class and the poor. So can you discuss what is happening at the moment and how should people be positioning themselves defensively right now?
I'm going to throw the UK debt markets at you, and this will help answer the specifics of some of your questions right now. These rates are creeping up, and the UK is in trouble. Essentially, and as I mentioned, they have the same malaise as the US without the hegemon status, as you know. And what we're seeing from our side here is that this is the 30-year. In fact, I will choose the 40-year. Maybe it's a little bit longer term. I think it's almost a better example, and I may already have it. We're going to put a structure, a draw on here and highlight how the rates are going higher. And what that actually means is, and the same applies to the US, but it's actually, I think the UK is going to become the headline of world news on this basis, on debt, higher rates. That's going to crash housing. It's going to put a lot of pressure on housing. It's going to put a lot of pressure on any corporation that's borrowing, any individual that's borrowing. Anybody who needs to buy housing is going to find much more expensive borrowing costs, or vehicles for that matter, which is an asset class that's got a bit overexposed to lending in the UK as well as in the US. And the same principles are holding for the US. The UK is pushing to the front of the queue now with their rates, with some very specific issues to them. They don't manufacture anything. The services economy that they used to have has contracted immensely. Europe's wanting some of their own City of London vibes, so that they kind of got fragmented there. They've pursued a very socialist agenda. They brought in a lot of immigrants at great costs, and they're housing them in hotels, etc., as a percentage of the population. Various other things, as well as, all the usual boondoggle industries that the politicians seem to get rewarded for overspending on. So they've had a spell of hyper over expenditure, and now they're facing much higher rates. And that's going to do real damage to them in the same way as the US. But they're just pushed to the front of the queue where the US was leading there. So if we just go to the US, I'm not sure you have a 40-year instrument, but you probably have a 30-year, so we'll go there. It's true of them all. It's just more apparent that it's going up in the UK. But in the long run, this also goes up, the 30-year. And you can see how close you are to highs. I'll just take some of these drawings off. You're not that far off all-time highs. If we take what is your highest close, I think the highest close is there or there. That was probably the highest close. That's where you're trading right now. You're 3.4% off your highest close on your long-term debt instrument. It's not very big move. You're at 4.909. If you go to 5.08, so 4.909 to 5.08, you're just through 5, you're not 5.1 even. It's very easy for that to happen. And this little structure will see you follow the United Kingdom. That's a little squeeze for further upside continuation. Yes, you're coming down now, but if you go up and break that, and this is all a bull market. And in terms of the yields, not on the bonds are obviously doing the exact opposite, going down in value. So you're very close to all-time lows on debt valuation. And at the same time, the dollar has been the worst currency. I was actually just preparing some charts for some other work and a newsletter I was doing, and these might prove interesting for you. I want to show these off. This will just give you the top 22. I couldn't squeeze 25 on of currencies that the dollar has been performing against. So a lot of people saying, hey, our NASDAQ's at the all-time high. Okay, let's just have a look at this. you first had a 26.48 crash. So the melt up, people, that's not a melt up. Your melt up is when you do that and then crash, not when you have a crash and you return to the previous level. You've since put 7.65% on the previous level, which is the same as having walked across there, only you had a shocking drop in between and your volatility got really, really high. But if you look at how the dollar has performed, you know, you've underperformed the Thai baht by 2.5. The South African rand is a better investment by almost 3% than the dollar. The CNY, that's China, the Indian rupee is 3.2% better than the dollar. The Turkish lira, Elijah, is a 3.5%. I mean, that's a travesty token of destruction. The PLN, which is the Polish zloty, is 4% better. Now we start getting into the loonie, which is the CAD, your neighbor. I almost said Canada for the Canadians. The Egyptian pound is 4.5% a better currency than the dollar this year to date. The Australian dollar 5, New Zealand 6, Japanese yen 6.41. The pound is actually 7% better performer than Norwegian kroner, almost 10. Mexican peso is 11% outperforming the dollar. If you started this year and you converted all your dollars to pesos, never mind the interest rate you probably might have got if you put a call account on here, and you went down. So why am I laboring all the way through here? Well, you can see euro 11.1, Swedish 13.5. You're going to 14%. Brazilian real. These are emerging market currencies I'm talking about that have got 14% bigger today than the beginning of the year against the dollar. So 7.65% higher than this level. It's not a melt up. The ruble is 42% higher, by the way. So much for sanctions. Their currencies got stronger. They've got no debt and they're buying gold. It seems like a smart strategy to me. They're having less problems. They'll get more for it. The Hungarian forint is almost 15. So I'm over-laboring the point, but what we're actually saying is in dollar rebased terms, that 7.65% is a terrible performance. If you take the NASDAQ and other US investments, you are, whilst everyone's bragging and you should feel great, you're at all-time highs, you are in debasing terms going backwards on a number of levels. And it's worth showing you that. I'll just take the NASDAQ and I'll divide it by a currency. So your currency debasement has now caught up with the debt debasement that we first told you about when we've been interviewing for quite a long time now, 21, 22. I was highlighting about the turn at the end of the 2020 COVID markets, how debt went down. I was doing with my hands, then the fiat goes down. You're in the fiat debasement part because they Siamese twins. Money is borrowed into existence. You don't separate them. They conjoined at the head. The debt instrument crashes, the currency crashes, and so it is. They walk together. They don't separate, unfortunately. And when that is happening, your cost of living is going up. And I've been talking about a lady that she was an ex. She had a till slip from Walmart from 2020, and she filled the shopping basket with the identical items by weight, brand, and everything. And it cost 134% more, which is a 2.34x on what she previously spent. So in 5 years, she's claiming basic essentials. I don't think there was anything special. There was the same washing basket of items. She's claiming that they are more than going for 2.5 times more expensive in a 5-year period. This is your dollar-based debasement, and that's part of your reason why your gold has shot up so far, and we only see that getting worse. And if we do the NASDAQ adjusted for gold, just for that purpose, you've actually reached peak stock markets some time ago. You reached peak stock markets over here in gold terms in November 21. You're already in a turning market. Yes, you've had a bit of a bounce now. The NASDAQ has had a rally after an absolute crash, but that's reactional. This was the crash from here, and you went really far down in a very short time. It's natural to have a bounce back to this level, but you're back at resistance, and the trend is lower highs, lower lows, lower highs, lower lows. So, prepare for the next best thing. Gold is outperforming stock market. That's the fact. Regardless what I just said on the short, medium term that we could have everything sold off, gold will go down far less. The other key point, I want to highlight this. Bitcoin in the carry trade of last year in August fell 39%, I believe it was. It was either 30 or 39. So let's go with a smaller one, 30%. Gold didn't even manage 5% drop. It went down 4.7% in the drama of the carry trade unwind. Gold is still very good to hold in the downsides, and that's where silver hurts you a little bit, which is why I say have the mix, gold and silver, because the gold gives you a little bit of stability on there. No one cries too hard about a 4% correction. You will have, if you're in Bitcoin, have lost 30% in that period, especially if you were forced to panic sell or to buy items with it, it devalued. Silver fell higher amount, but not as much as Bitcoin. So let me hand back to you so that you can choose to mine down wherever you feel.
No, definitely. I think those are all very good points. And it really was shocking to hear, the one lady who bought the items from Walmart, and the prices increased more than 3 times there. So when we look at that going forward, if we're in this, you've talked about that we're headed towards a period of hyperstagflation, and maybe we're already in it at the moment if we're seeing such high inflation. What does that mean for the middle class and the poor? And what are the wealthy doing at the moment to kind of take advantage of this situation?
So the super wealthy and the control structures, I tend to call them, in the individuals that make that up, actually get richer in hyperstagflationary environment, which is kind of a phrase we've coined to incorporate an extreme version of stagflation. Because everybody goes, oh, you mean like the 70s? We're going, no, it's not exactly like the 70s. It's worse. It's far more extreme, and the debt levels are much higher, et cetera, et cetera. You weren't at Reinhardt and Rogoff levels on the US debt to GDP in the 1970s. You weren't, the rest of the world wasn't so well coordinated and also at ridiculous levels during the time that America was, etc. So we've got a much bigger problem by geography and by debt levels at every level, hence the hyper. So we stagnate. Stagnation means wages don't move very far. You in real terms are going backwards. Financial repression is bond market chronically underperforms in real terms. So the yield being paid isn't sufficient, and the capital valuations are going down or flat. So that means it's a terrible asset class to hold. And everybody realizes that. So bonds were very bad performers during the 70s. They're going to be even worse performers now. We've highlighted many times before with you how the TLT fell 55%. That's your bond market. That's your long-term bond market. 20s and 30s plus ETF of those debt instruments had lost 55% in the space of 4.5 years. Now you're going to have the currency debasement, and the cost of living aspect is going to make it very expensive for the blue-collar working class. They're going to get angry, because far more of their disposable income goes towards essentials. The middle class, it's suppressionist. They carry the tax burden. So part and parcel of the stagnation is there's a shortage of money, and your government goes into tax scavenge mode. By the way, the tariffs are a tax that Donald Trump has introduced on the US citizen for his purchasing decisions if he decides to have anything that's made anywhere else outside of America, which invariably, despite being a big country that makes a lot of things, you do need a certain degree of imports. There might be certain specifications of goods you need to a certain standard that you simply can't get an American brand locally manufactured. In fact, you don't do much manufacturing anymore yourself like you used to when you were coming out of the war years. So you're not the same economy. You're not the same man. Even though you've gone to the same place, it's not the same water or river that you're standing on. It's different H2O particles, and you're a lot older, not nearly as fit, not nearly as strong, not manufacturing any much the same amount that you used to manufacture post-war years when you were a juggernaut in truth, and really dominant in every way. So that's changed, and it's a hard pill to accept, especially when you're in the bar room swinging punches and you're telling everybody about your good years, they're behind you now in that sense as an economy globally. And there's downturn and real threat and damage to that. The opportunity, of course, is recognizing that and getting into the gold and precious metals. But hyperstagflation is going to bring an immense amount of distress and social unrest, and it's going to be encompassed in the social aspects are going to be encompassed in the financial reset, and they're going to present their solution, and then you're going to find out how that looks. And it isn't dandy. Inflation is a billionaire enrichment tool because they get to borrow real cheap, big corporates or big names, usually through entities, even though they're big owners. The individual as a big owner is not necessarily named on the loan because they don't risk their own names and things for bankruptcy. Tesla, for example, Elon Musk and the people behind him will have borrowed cheap. They will have got a lot of revenue from the state. And in actual fact, when the dollar loses value, their share price goes even more up because everybody needs something that isn't going down at the rate that we believe the dollar is going down. And so they get billionaire class. The debt that they borrowed gets devalued. They were never charged high rates. They had possibly fixed deals or, some hedging strategies that mean that they don't suffer the downside, that the consumer products that are available for the everyday middleman who's an accountant, lives in a middle class area in America, has a nice 3-4 bedroom home, 2-car garage, but he doesn't have access to the same credit, the same terms, the same through an entity option. So it's an enrichment tool for the billionaire class. It's at the final phase of hollowing out the Gini curve, which crushes the middle, particularly in terms of West. They will carry the burdens of the taxes and takes the working poor and blue collar to the breadline. And that's going to cause a lot of angst, and it's going to be, they will be controlling the narrative, and they will divide and conquer as they always have done, turning blue collar against middle class man. And that's the social unrest part that should be a great concern. And it's all been orchestrated by state. Over expenditure of state is inflation. The proliferation of fiat is inflation. And what you're having is a cost of living crisis across the board that's going to be devastating for most working Americans, except the billionaire classes that own huge assets on cheap borrowing. That's the answer to your question, basically.
And what is the role of tokenization? I know in that video you posted on YouTube where you talked about the hyperstagflation, you talked about that the elite are going to use the tokenization of real assets to take advantage of the situation here and to transfer wealth away from the middle class and the poor to the wealthy.
Well, it's very ironic that the base of 2009, obviously they started the Bitcoin experiment, which appears to be a digitalization on-ramp. It's also not ironic to me that you have Palantir, the corporation that is receiving huge government status contracts from the Trump administration, that there's discussions with Shinbaum of Mexico regarding biometrics for the Mexican population and potentially the use here. Donald Trump, while he was actually dealing with Zelensky and Ukraine, actually got conveniently asked a mail-in voting question, for which he said he's going to stamp out mail-in voting and fraud, for which I think he's going to it'll be leaked that a biometric option for voting will be required. So they know everyone who votes. For example, in Australia, everyone has to vote and it's controlled and everybody is tagged for voting and participating. And I think what you're going to end up happening is you're going to get your biometric surveillance state introduced. So Biden shooed in all the immigrants and the criminals from the Latin American countries that were being shown the way to get onto the welfare tourism ladder in America. Trump, in the name of fixing the problem, waited for the reaction, anger, a lot of, crime, etc., brings the solution, the way we fix this, and you get the actual synthesis they always wanted, which means a further digitization of all your travel, passports, which will involve biometrics, face recognition, fingerprinting, and everything else. And now your question was around tokenization, so I've laid a bit of groundwork. Let's get to that. You'll find that a CEO of an asset management company is now turning into a stand-in CEO for the World Economic Forum at some place that was largely housed in Europe and held talk shops over there. So you can see how corporate entities with a massive quango that was started by Klaus Schwab with the help of Henry Kissinger, etc., is all part of your global governance, and are the people that are discussing plans, and we're the ones behind the thought paper, you will own nothing and be happy. How do they get you to own nothing, and how do they make you happy? I think pharmaceuticals for the happy side, although I think that's PR and propaganda. How do they get you to own nothing? They suggest that everything in terms of the post-collapse environment, which we are still to experience, we need a more equitable society, and we're going to go for this more Marxist technological vibe where everybody gets a UBI and you have a social score. And by the way, you need to register all your assets so that we can see who owns what. And once they've got you to do that biometrically, they can then start taxing people out of them, which will mean, for example, if they passed an unrealized capital gain on gold holders, we would be forced to sell some gold to make that tax payment. And they will weaponize the mass poor, which will be 90% of the population, unfortunately, to say these guys that were, hodling their pet rocks have done real well at your expense, and we can't build the airport because of them. It's time we think the unthinkable and have a wealth tax, and all of this. We'll build back better together. All the catchphrases. We'll get you, and we're all in this one together. Solidarity, which is a very Bolshevik communistic term. So I think they move us into tokenization of assets first, where you're obliged to register. Otherwise, there's fines, there's threats of prison, various other ways. This could set up either confiscation, and if that's too outright dangerous, taxation, where you become a forced seller of the asset that they want to eventually own. Till eventually, when you buy a house, all your paperwork and potential rental agreements and documents will all be held up in the blockchain, in the cloud, basically, and someone else who bought your NFT that represented your house could then trigger a rental agreement on you, on your property. And we all have to be this Airbnb existence where you just rent whatever you need wherever it is. And that's why they're such fans of these driverless cars, batteries, and various other things. Now, it sounds far-fetched, and many people watching this will say, I'll never go along with it, and I'll never let it happen, and they won't win, and I've got guns, and all the other typical responses that I'm so used to hearing. And I just point you to CV19, and you look at how many people complied, how many people died, how many people followed, how many people really lost their jobs because they refused on principle. They were a very small minority, and they can nudge, they can media splain, they can do a lot of things that could be very, very damaging. So just buying your gold and silver is part and parcel of securing your balance sheet. You need to be in a community, you need to be self-reliant, you need to get away from states as possible. To most Americans, because this is a Western attack vector, I encourage them to have options outside of the West as a right of residency and other places that they could go. Because I feel that the living standards of the Western man and woman, of course, are the ones that are outlier high and are coming to be crushed. And BlackRock, Blackstone, and Palantir-type corporations that are corporate fascists working with states against you, you don't undermine these corporations enough. You should demand their breakup. You should demand far more investigation. You should ask why their boards aren't diverse when the companies that they own, they forced all these inversion, perversion rules on you during the Biden era. So there's a lot of work to be done in fighting back. And at the moment, unfortunately, it looks like they're winning.
It is shocking, even how I reacted, to COVID, right? Really complying with a lot of these rules. It's like, oh, that's the right thing to do right now. Where it's like, that was shocking and crazy that the whole world really went along with this. So I think a lot of people, though, right now are more resistant to comply with, these rules coming from the big corporations or governments of the world. So do you think this time there will be more of a reaction, or do you think it's going to be similar to COVID-19 where, the vast majority of the population just goes along with it?
They'll write more laws that will permission more force. So some people there might be a higher tendency for people to display skepticism, but I'm afraid to say I don't think that goes up hugely. I think it goes up a bit. But what they will do is they'll have ever more powers. What people aren't noticing is and I don't know either, but the people that do look into this tell me, your Genius Act, your Patriot Act of post 9/11, your Genius Act and Big Beautiful Bill. These papers that are being passed are absolutely draconian. Now, I think America stayed out of the new WHO agreement, which is 1+, but most nations have been captured by the new World Health Organization agreement signatures that were made, signed up. And that gives states full right of force to bring in medical interventions on people that would actually change how things are with CV-19. Literally, a SWAT team and a nurse could technically show up, and you could be denied all sorts of things. So, I mean, that is brutal, and it's communistic. The concept of self-determination and self-reliance is under attack. Privacy is under attack. And you don't resent your government enough, and there should be far more consequences for captured governance. You really need to have a look at who's getting away with murder and who's allowing that to happen, and you need some serious pushback against your local politicians who comply with that and get corrupted and become national politicians, because from the top down, it's pretty filthy government. All through. And it doesn't matter Democrat or Republican. So sorry for the Trump friends and the Biden. I've no dog in either fight. They're filthy, all of them. They're corrupted and they're filthy and they're selling you down the river. End of story. And you really need to there needs to be adverse consequences for these people that are co-opted against the citizens and go and do things for a bit of money for themselves and a rope around all their neighbors and citizens. It is a battle of good and evil, but unfortunately, God helps those who help themselves. You need to push back, and there need to be consequences. Justice is not anti-Christian, and is not anti-godliness for people that are doing nefarious actions against the populace and citizenry. And my argument is that the governments have got too big and have stopped fearing citizens, and citizens now fear government. And that is very wrong, and it's gone way too far, and it needs rolling back.
So owning real assets, really building community and opting out of the system as much as we can. Any last thoughts for our viewers of preparedness steps that they can take?
Well, the one thing is, whilst you stay still in the American country and state, and I'm not trying to get everybody to leave, but I am pointing this out. If they pass laws that we are now going to a tokenization conveyancing system for property, and that it should be readily searchable on this database, by the way, which funnily enough, Palantir and Peter Thiel and all his friends right the way to Tel Aviv can all investigate at any time, and your own personal security cameras can be hacked into from the Wi-Fi so they can look at their future home, and all of this is going on. Even if you've gone rural, you have a farm and you've got a few friends on a farm and you've all got a couple of acres each and you all got each other's back and firearm to the hilt and ammo and cans of beans. If you are told to pay your property taxes, and this is the system that you must have, and you have to register on XYZ app that links into the blockchain and also has all of this, and if you're out of the system, you can't do it. It's going to be very hard long-term to stay in a manual system, manual conveyancing environment when they use squeeze and technology to push you out of it. I mean, think how we used to get our milk with milk coupons dropped off by a battery cart and all of that. Nobody does that anymore. They taper us out of old things. Now, I'm not saying a battery milk cart was necessarily a thing worth retaining, but in terms of registration of property and everything, they'll find the weakness in self-serving communities. And it's very interesting how the Mormons and the other communities that are very strong and conjoined and have resisted technology, I'm thinking, help me with the other word, the Amish, are going to be handled in terms of this, because I don't think they want to make too many exceptions for anyone. But they don't have much autism. They've resisted the technology and medical interventions. And I wonder at what point they try squeeze them and what their reaction will be. Might be time to have, if you are to stay in America, to have your property close to communities like that and be kind, friendly, value add towards them and a good community member, and work together with them as closely as possible if you're thinking of seeing this out in the United States.
Fantastic. Well, Francis Hunt, we really appreciate your time today. As always, if people are interested in learning more, they can go to themarketsniper.com. You're also on YouTube. Can you tell us a bit about that?
Yes, sure. Our primary goal is that this is a unique time. This is a reset. By the way, all sounds so doomer, all sounds so negative. It's an interesting life. You didn't ask and you didn't vote for a boring life. You asked for an interesting one. You chose to be here in this time. This is your goal. This is your interesting race that you're going to run. And you can just play the hand you're given to the best that you can. And that involves taking action, being positive, keeping fit, being an inspiration to other people, giving value to other people, being a good human, being someone of principle. And we intend to help people build wealth, because unfortunately you do need to retain wealth during these times. It is a mechanism for transacting, preserving that wealth, and having optionality on your freedom, the three key points, so that you could have an existence, possibly in a different country, different state, etc., if things went particularly bad in your area, but also retaining your wealth through an environment where hyperstagflation is almost assured and the cost of living is going to go up immensely. And there may be a lot of social discontent during that period. That's our core focus, the financial element around that. And you can come to the YouTube channel. We have links to book for a call and see our calls on some of the trades. We have been cautioning about gold and silver for a while, and you can see that it has slowed down a little bit. Some big macro calls, all done technically with HVF method, our bespoke technical analysis tool. Thanks for having me on, Elijah.
Thank you so much. As always, look forward to the next time, Francis.
Bye for now.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 18th through August 25th, 2025, while supplies last. First this week, the 1-ounce gold Australian kangaroo or gold nugget coin are just $60 over spot per ounce. Next, pre-33 US gold $10 Liberty coins are $50 over melt for AU grade and $70 over melt for BU grade. Gold 20 franc coins are just $30 over melt per coin. Next, silver Australian kangaroos are only $2.79 over spot per ounce, and with a 250-ounce monster box, they're the lowest priced monster box available. Finally, silver 10-ounce Nordic mint bars are just $1.89 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.